Low, test, low, low, low. Okay. All right. So welcome, welcome. Hello, hello. So I'm gonna start as usual. I will just randomly pick any month throughout this year, and then we will backtest that month. November. Perfect. Let's create a session for November. November. Oops. Thank you. But what the hell? That makes no sense actually. Wait, we are in October. Yeah, the hell is wrong with me? My bad, my bad. I'm really sorry. October's not done yet. We do it again. April. Okay. April. Okay. April. Create session. All right. Hello, Ihab, baby. How are you? I just named it November. Never mind. Nasdaq. All right, let's start. Okay. Let's just explain the strategy. This strategy is my first orb strategy that got me funded. I used to trade this last year. It was amazing. I loved it. But along the years, I've got a lot of experience, and now I'm just gonna be adjusting the rules. It's going to be a one-to-one strategy, just a one-to-one. Uh, so basically, mark the high and low of the orb as usual. What do we want to see? We want to see at 10 a.m. right? We want to see a sweep of the low of the orb, even if the price swept it before 10 a.m. So let's say, so 9:30 is the candle, 9:31 up till 10 a.m. The price tagged into this low, sweeps it, so our bias is gonna be longs, but our long has to be inside the orb, not outside, right? So we will be interested in the longs inside the orb, because outside, as we know, and as you saw my first strategy that I uploaded on YouTube, which I backtested full complete year 2023, we only look for shorts below the orb. So I'll be looking a sweep of the low, and then an inversion, fair value gap inside the orb, and the price inverts that fair value gap, and then we're gonna go for the longs. Stop is at the recent low. Swing low if you are for long, swing high if you are going for the shorts. Okay, and vice versa for the shorts. Price sweeps the high of the orb. If it goes up, we don't do anything. We wait until the price goes down into the orb and gets an inversion. We go shorts, going for 1-to-1. That is pretty much it. The strategy is as simple as this. So FOMC days, no trade, Fed Powell speaking, of course, red folder, no trade, and any presidential speech, which is this year. I mean, Trump in our case. But sometimes Trump, when he speaks, it's orange folder. We do not mind this. As long as it's not red folder, we avoid it. Okay? Oh, am I missing anything? That is it. That's pretty much it. And our entry is not going to be a market order. It's going to be a stop order, which I'm going to explain how we will execute the entry. Yes, inside the orb. We're going to be trading inside the orb, but only going for 1-to-1. Because inside the orb, like, we know that the price kind of chops, but if the price inverts, sweeps the orb low, and then inverts a fair value gap, it might have a big move to the upside to the 50%, then retrace, or maybe a fully reverse. So that's why we will only take a small move out of it, which is 1-to-1. We'll be backtesting this month, and we'll see the win rate. Oh, and then it's up to you guys if you like it or not. You can add your filters into this strategy, and yeah, that'll be it. Obviously, don't forget the tags, the variables. I'm not gonna do the variables and tags because I did it. It's gonna take a lot of time. Add whatever tags you want to see. Add if you want to see daily bias correlating with the 15-minute orb and the 1 minute. Do you have an SMT above midnight open, above VWAP? What's the hourly? That's up to you. That's all filters. But the rules of the strategy, it's simple as this. That's it. Sweep of the low of the orb, we look for an inversion. Sweep of the high of the orb, we look for inversion for short. For instance, let's say the price sweeps the low, doesn't give us an IVG, and then sweeps the high. Our bias is no longer longs anymore, it is shorts. We switch from longs to shorts. So we use this as a support and resistance. The price went back down, retest the low, we look for longs. Went back up, retest the high, we look for shorts. Okay? That's simple as this. That will be it. If there's any question, please let me know so that we can proceed. Well, that's not Powell, so we can trade. We don't mind this guy. All right, lovely. I'm gonna start here. That is our 9:30 candle. What the hell? Okay, we start from other day. Okay. That is Wednesday. Nope, It's fine. We mark the high and the low. Now, so I look, so see, that's before 10 a.m. candle. What's our bias? We look for shorts because we swept the high of the orb. But I'm gonna move forward into the 10 a.m. candle, okay? So now that's the 10 a.m. candle. So, what do we have? An inversion. That's our first inversion, right? We have this inversion though, but that inversion's been inverted above the orb. So, we don't go for this, right? But let's say, for instance, this candle inverts the fair value gap. Not only that, but it also closes below the range. That's where you enter. That's because you have a checklist. Am I below the orb? Ask yourself this question. If the price inverts fair value gap and you are inside the orb, that's it. You go for shorts. So, but obviously it did not happen here, but it happens a lot. You will see it. Maybe if it's not in this month, maybe the months after, or the months before, throughout this year, I'm sure there's a lot of scenarios that happens like this. Big inversion inverts the fair value gap and at the same time breaks below the orb. That's your entry. That's a valid entry. But in this case, that's not valid because the price inverts above the range. Okay, so that is our first inversion in our face. So we have another inversion here. Yep. Yes, I forgot to say something. 10 until 11 a.m. 1 hour window. So this day we have no trade. Okay. Go to the next day. We mark the high and the low of the orb. Who is speaking here? It's PMI. It's fine. Okay. So now we will be looking for longs. What time is it? It's, yep. So we have a fair value gap here. What the hell? The price needs to invert this fair value gap, but not only that, also closes above the range for us to go long. For like here, for instance, we're not interested because it's inverted below the orb. We just got, okay, we have our entry here. That is our inversion. Our entry is a stop order. So what does that even mean? Okay, the candle that inverted the fair value gap, it will leave a wick behind 99% of the times, which is this wick. So your entry is going to be here, stop order, your stop at the recent swing, targeting 1 to 1. Okay. Stop order. We got stopped here. Okay. The price executed our stop order, and we got stopped. Next day. 1 trade a day, obviously, 1 trade a day. Okay. A.m. Okay, now here it's 10 a.m. We sweep the low, we invert the fair value gap, stop order above this level, stop is here, targeting 1 to 1. Who's speaking here? Oh god, see? Well, we don't trade this day. It's Fed Powell speaking. We just saved a stop loss here, just because this guy, when he talks before the AM session, he might mess up the entire market, so we just saved from this loss. Monday, high and low. Nah. No trade that day. High and low of the orb. Is a real holy grail if you actually set the rules. Yeah, I agree. It's an edge. It is an edge. Okay, that is our entry though. Actually, before that, stop order here. That's our. Oh, actually, there's a swing here. 1 to 1. And a TP hit. Okay. Our entry was 10:56, so it was valid. It was before 11 a.m. Actually, oh my god, I just went all the way. I mean, you add your filters and then you could. It's really upsetting, by the way, when you go for 1 to 1, and then you see the price just dumps all the way. Like, holy moly, what is this? Until London lows. That is a draw. So that's 7R. Who is displaying this? Okay, this is FOMC meeting minutes. We avoid that day. High and low. No one is yapping. Okay. We have a first inversion here. Okay. Price inverted at fair value gap. We're gonna place a stop order. 100 RR. Yeah, sure. You wish. You wish, bro. And we got stopped here. Price went to 0. Holy moly, look at this 131 point stop. That's insane. That's actually insane. I remember April. This day was very this year was very highly volatile. I was speaking here. Nothing. Oh, okay. That's our entry. 10:01. Stop order. Stop is here. 1 to 1. TP hit. Move on. I hate April, man. April. I remember, like, now I'm just recalling, like, my average stop is above 60, 70. Like, your stop could be that small. Look at this. Your stop could be this small, and look at that. That's a 50 point stop. On a normal volatility, that's like 20, 15 points. Okay. Alright, so the price swept 947, swept the low of the orb, and then it inverted this fair value gap. We place a stop order. Our stop is here. 1 to 1. Khadr is still looking for Holy Grail. Yeah. he always oh yeah. Yep. Khadr, the Holy Grail is right in front of you. You just need to know how to tackle it. High and low. What is this? Oh, that's European. It's okay. We move on. That is that a fair value? No, that's not. It's not a fair value gap. Sorry. Oh. See that entry here? Oh, actually, no, it did not invert that fair value gap. That's very sad. It inverted the fair value gap, but it did not close below the range. That's very, very, very sad. So our first inversion is gonna be here. Yep. $103 points. My God. mean, that's really disgusting. What is this day, man? TP hit. How many minutes? What? Wait, hold up. We're here. 3 hours and 39 minutes. Yeah. April was something else. But you got the idea, right? So you reject the high of the orb, look for an inversion, go for 1-to-1. And that's it. Next day. I think that's FOMC. Nope, that's Fed Powell speaking. This guy is not gonna let us trade in peace. No one's speaking that day. Right, lovely. So look at this here. We got our ass saved. That's an inversion here, right? Actually, no, it inverted. It inverted 959. But let's assume the candle inverted this. So we'll be placing a stop order here, and the stop order wouldn't be engaged. We'll be saved. No trade that day. It's 11. 21 April. We're almost done with the month, by the way. Goddamn. But let's see. So this month we only had 4 trades, I guess. Yeah, just left without us. 10 a.m. is here. Next day. Just leaving without us. Next day. What's happening? Okay. Thursday, high and low. Oh, come on. You serious? But you remember the old strategy? IFVG, that's the entry. I mean, if this month finishes fast, I'm gonna do another session because I barely did only 4 trades. Okay. That's 10 a.m. Okay, so now price did not leave us an inversion behind, so now we sweep the high of the orb, we look for shorts. That is our inversion. Actually, that's the entry here. I missed it. See this inversion? Small, tiny inversion. That is a valid one. We place a stop order here. Stop at the recent swing high. Go for 1-to-1. Boom. TP hit. Let's see how much will it. You could be greedy though. Remove some contracts, leave one on, and then yeah, that's clean. So the highest probability for a strategy is, I've noticed that in forward testing, when the price breaks above the range and then closes strong, inverting a fair value gap, that makes that makes the probability even higher. Okay, so now we entered shorts, right? And then price hits TP. Let's see if we enter long, what will happen. Because now we are in shorts, we swapped the high, and then we retested the orb, the low. So we'll be looking for longs. Our first inversion is gonna be here. That's if you want to trade more than 1 trade a day, right? There's no shame in that. Stop order here, your stop's a bit big, and then you target 1-to-1. Let's see. Yeah, it hits anyway. So if you went long, you'll be in the profits. If you went short, you're in profit. And let's say you did not, oops, my bad, you did not enter that day. I mean, You just want to enter shorts, right? Let's see. Price retested the orb here. We did invert here, but the price did not break that low. It invalidates our stop order. When you remove your stop order, if the price hits the stop without invalidating your stop order, that's where you cancel the order. Let's see, we have an inversion here. Price inverted this fair value gap. We stop order here, your stop is here, and then 1-to-1 hit. Look at this. Short, TP hit, long, TP hit, short, TP hit. And that's how I treat orb as a support and resistance. It bounces off the this level, gives you an inversion, go for shorts. It bounces below, it bounces at the low of the orb, you take longs, etc., etc. The days where you actually don't like is when the price is trendy. It was just gonna go without you. All right. So, like, we just have three winning trades in one session. If you want to trade more than one trade a day, right? Go next day. Ooh. Okay. So our bias is shorts. You can trade before 10 a.m. You can backtest it. I did backtest it. It's not very promising. It's very rare the price does something like this, right? All right, that is our entry. Price inverted this fair value gap. Stop order above the high. Stop is here. Let's make sure we don't have any news. No news. And stop loss hit. It's really sad because we're very close to TP. You could obviously there is no break even, but you could take this as a tip. If the price goes to your favor, right? You could set a rule. If the price goes to my favor and inverts another fair value gap, just move to break even. Or if you think that the stop is a bit high, you could just wait for another swing to be formed and then go for longs. Okay? Like, these are all rules up to you to do. I'm just giving you the rules and I'm backtesting based on the rules that I just gave, right? Okay, swap the high. It's gonna leave without us. Nope. Yes, nope, yes, okay. Leaves without us. Very rude. 30th of April, I think there's an FOMC day here. Nah, it was President Trump speaking, so that day is skipped. And April is done, but I think we can backtest 1st of May since it's available for us. Let's do that. Yeah. I only have April. Let's go to the analytics section. What do you mean? The entry is on IFVG. I enter on IFVG. So we're up 1% this month, which is not bad, to be honest. Like 3 losing trades, 5 winning. That's beautiful. It's really beautiful. Like, a strategy with low frequency doesn't have to be bad, by the way. Sitting on the charts every day is not healthy. So that's, to me, that's very good. This is very, very good. But bro, the orb, this is based on the IFVG. If we sweep the low of the orb, you wait for an IFVG inside the orb, inside the range, and then you go for longs, and vice versa. If we sweep the high of the orb, and then you find an IFVG inside the orb, you go for shorts targeting 1-to-1. I mean, that's a really promising result. Oh yeah. It's bro. My entry model is always IVG. I only enter on IVG, only IVG. But just the strategy bias is completely different. We are trading inside the range now, but we are only aiming for 1-to-1. You can just rewatch the video again, bro. It's very simple strategy, but I love it. I love it so much. Actually, I've been using this a lot recently. I've been using this a lot. If I know where my draw is, I will just hop in, see if any rejection on the orb. I have VG enter inside the range. It's beautiful. Two, two, two. 8 trades, 5 wins, 3 losses. Well, this one, this specific one, I don't have much data, but I used to trade it differently. What I was doing is one set, epic pen. So I have the data for this strategy, and I can search and then show you the analytics. That is the orb. You draw the high and the low. What I was doing back then, if the price gives me an inversion below the range, I will go shorts, which is the one that I usually do and I showed you. But if I get stopped, I no longer look for shorts, I look for longs inside the range. Right? So my bias is basically like this. Breaks below, I look for shorts. Breaks above, look for long, short, long, short, long, short, long, short. I used to trade two trades a day. Breaks below, shorts, above, long, shorts, long, short, long, shorts. Yeah, I remember what you were doing, but long term not profitable. Well, I don't really agree with this because I have 10 years of data on the old strategy. It's just this year was a rough patch for it. So, and I learned, by the way, the losses that I have, I learned a lot. So I adjusted my strategy. I adjusted it big time, to be honest. I've gathered over 2,500 trades the past 3 months. And then I've been forward testing it September, October, and August. I'm having an amazing results. Amazing results. So if I use the adjusted one on the beginning of the years, I would have better results than I have now when I forward tested. I mean this year. So I'm really happy with the new. And this one is a part of the adjusted strategy. This new adjustment that this strategy that I'm showing you guys, it's probably 20% of what I refined on my model. So that's trading, bro. You need to refine. It's good to face rough patches because it teaches you. It teaches you a lot. Thank you, bro. Thank you. So that'll be it. Any questions, boys? It's a really easy strategy, really simple, and it's good. It's really good. What's that? Well, obviously, risking 0.5%. You can risk more. And if you're copy trading, you will be printing this month. If you're copy trading, you'll be printing this month. It's only 1%. It's like, and I'm sure if I backtest more, I'll get way more than this. Okay. No questions? How are you, bro? How have you been? You didn't see you for a while, by the way. Let's see this scenario. I like this new simulator thing. It shows you the percentage if you went more than 1-to-1. So 1R is 63%, 1.5, 38%. You'll have this. That's an an estimated profits. You'll have. Well, you're just down. 2R 38% win rate, but you'll have 500 profit, which is less than this. Funny, 2.5 has more profit. Interesting. That is really interesting. I don't think that's accurate though. I don't know the metrics behind this, but I think this works way better on forex pairs rather than futures. It's more accurate on forex. Okay, that'll be it, boys. You have a good day, and I will see you next Sunday with a new strategy. Peace. Bye bye.